The U.S. income tax has been around since the Civil War. I'm Paul Vasquez with Tax Lab. We help businesses save tens of thousands of dollars in taxes, and you can too. That's right, the income tax in the U.S. was only first instituted by Abraham Lincoln back in or around that time. It has to go through all the governmental stuff. Back in the Civil War to raise funds for that. The income tax at that point was just a temporary tax for war times. And it was actually dropped a little bit after that. But World War I set a new precedent for financing wars. So in order to bolster U.S. credit when it came to financing wartime efforts, that income tax has become a staple in financing national defense, we'll call it. So the IRS has been looking for ways of finding wealth created by U.S. citizens that they can tap into to help fund government, the war machine, and a large portion now goes to funding our civil programs or wealth transfer, mostly to our seniors. So the IRS has been going after the money, and then the wealthy have the means to fight the IRS in ways that help them maintain their ability to gain wealth and still be able to pay some taxes. Now, because of that, the tax code has been developed in such a way that it actually creates a roadmap to wealth in America. And it uses a set of carrot and stick to penalize you when you don't do the smart thing and reward you when you do. Now, I don't believe this is on purpose. I believe this is just emerged from the fact that this is what's been going on in our past, is that the IRS sees that there's money out there. They try to go after it and get some into the government's pockets, coffers, and the wealthy say, don't take all my money or else I won't do it, and there won't be any money there. So there's this kind of give and take throughout the years as how Americans build wealth changes over time. And so we do have this roadmap for wealth generation, carrot and a stick that kind of says, hey, do this, don't do that. One of these things is something that you can take advantage of before year end. We call this strategy lost harvesting. So in life, you may have the opportunity to buy stocks, bonds, different assets that could be wealth generating or could just be assets in general, car, house, different things like that. So these are all assets, right? Some of them appreciate in value and some of them depreciate in value. Some of them generate income, others don't. So the U.S. has separated out income tax from capital gains tax. Capital gains tax is the tax generated from the sale of assets. So when you sell these assets, you have to pay a tax on that. And it's calculated differently in the U.S. than the income tax. It's calculated at a lower rate on average than just the income tax. So one wealth generating strategy is to try to shift your income from earned income to unearned income, because then your tax rates are on average lower. But now what happens if your asset goes down in value and you sell it? Well, the IRS isn't going to necessarily give you money back, but you get a credit against current and future gains in the market. So, because of that, if you look at, say, your stock portfolio, if you've invested in stocks, and you take a look at that, and it's the end of the year, and you have a big loser there, some stock you purchased has just gone down in value. Maybe you love that company, maybe you don't, maybe it's time to get rid of them. So the IRS will actually reward you for doing the smart thing, and that's getting rid of those losers. And this will allow you to what we call harvest or capture that loss. That loss that you capitalize, that you take by selling, so you have to get rid of it, you have to sell it, you have to sell that stock and take the loss. It's not fun to take a loss, but if you suspect that that stock is going to continue to be low or not recover, then it is time to maybe cut ways with it. Now, there is a proviso on this that you can't just sell that stock and then immediately buy it back to capture the loss. You have to not buy it back within the next 60 to 90 days. So you have to be willing to part ways with that stock for a little while. And so you take a look at that portfolio, you sell off any big losers that you don't think are gonna help you, and that's the smart thing to do. And if you do that smart thing, they're going to give you a credit against any of your capital gains with that capital loss. So it helps reduce the taxes on that because you kind of captured that negative credit, so to speak, against any future capital income. Now, you can get they will allow up to $3,000 to be reported that goes against all sources of income. So let's say that's the one stock that you have down. It's the only sale that you make during the year, and it generates a $3,000 loss. Well, they'll let you take up to $3,000 against any other sources of income. So if you have a high tax year and you're saying, hey, I want to pay less taxes, that value of that stock isn't going to change whether it's sitting in the stock or sitting in cash. If you've lost $3,000 on that stock, the value of that is going to be the same whether it's in cash or whether it's in that stock. The value of that would be the same in that moment. So you just have to ask yourself, is it time to sell that stock? Maybe it is, if it's going to help you on your taxes. It's the smart thing to do. The IRS will actually reward you for it with that. And so take a look at that. Talk to your financial advisor. Make sure that you're sticking with whatever plan they have for you, but talk to them. If you have a financial advisor, talk to them about harvesting those losses before the end of the year. Most financial advisors are going to understand what that is, but sometimes they may need a little support and a little direction from you that's something you're interested in. And once again, if you want a complete tax strategy, tax and financial strategy to help you minimize your taxes and increase wealth generating opportunities, go to lab.tax, click on our advisory services, and schedule your free introductory interview with us. Hope you guys have all the success.